This is one of these conversations that we don't need to introduce ourselves. We know each other really, really well. Mike, we worked together for a whole chunk of time at banks, and then you're now running regular payments marketing co. And sometimes on the other side of the fence, sometimes with us, Richard, you were there. You've been there at Bottomline through our journey. I'm not sure. Is there a collective name for us? Are we payments aficionados?
Yes, I like that. I like aficionados.
You like aficionados?
Old heads.
Yeah, that as well. Probably better than musketeers. And I hate the word subject matter expert. So we've done our time in payments. And I thought it'd be really good to get us together on a premise. And that premise is direct debit's been around for over half a century. On the face of it, it's going really strong. Richard is keeping you employed. Mike, it's kept us employed for a chunk of time. And now in a fractional way, we're doing other things with other people, but still in that same spot. But I wanted us to perhaps have a few reflections on where we are on volumes versus value, where we are in terms of supply. We've just seen some contracts out between Pave.uk and Vocalink, and the new kid on the block, some challenges that direct debit might face after half a century. I wanted to ask you, I'm going to start. Let me give you two very quick quotes about direct debit, and then I wanted to ask you for your direct debit story. Mike, it's our regret that we never spoke to a guy called Alistair Hanton when he was alive. There are two great quotes. Alistair is probably the founder of the idea of direct debit, and there are two great quotes from Mike, and then perhaps we'll ask you two for a couple of great quotes. But the first quote that I remember from him is, "I had many meetings with stuffy bankers, but in the end I wore them down and invented direct debit." His other great quote was, "It all started with ice cream." Now I'm not going to go into those stories, but I want to ask you, perhaps let's start with Richard. What's your Bax direct debit story, and then perhaps Mike, you fill in the gaps there.
So I started with a supplier called Checkpoint back in the late 90s, who sold Windows software, both for PCs and on a black box. And at that time, direct debit was still very paper-based. The thought of automating direct debit instructions was fairly new, and we were just about to embark on a huge program, which Mike was involved in, migrating people across. And from that point onwards, in the late 90s, direct debit's been quite a large part of my life. And I've seen us move through several iterations. So the move to paperless was a really big revolution and hit the really large. But we're still at a position where there's a significant proportion of direct debits are still transacted with a paper mandate. That still happens. I can't believe that it's still the case, but it is. And I think there's still debate, and I don't know why there is still debate.
Paper just feels so last century, doesn't it?
It's incredible. That's incredible to me. I think Bax to IP, which we were all involved with, I was working with you, Mike, for Bax at the time. That was a huge change for direct debit. That allowed a massive amount of automation with the A reports. So the A reports, the unpaid direct debits, amendments and cancellations, a really key feature of direct debit, ease of the management. So once that data started to pass backwards and forwards across the internet really easy, that changed the efficiency of direct debit, and that gave it another sort of a bump up in terms of a preferred choice for subscription. And we've seen it move then really unchanged, but people are still using it. We'll talk about volumes, but in terms of Bottomline as a supplier to those organisations, we're not seeing any decline in growth of direct debit. The demands are still out there. People are making their processes more resilient. They are building more into their front end processes. There is more verification because confirmation of payee allows that pay name verification to happen. All these things are happening, and with very slow iteration now. But it's not very broken today. And I think as part of that journey, I know I've spoken a lot, but I feel like we're ready for a little bit more in terms of direct debit, but we don't need to do any sort of wholesale change. People trust it, it works, it's very solid and reliable. And for businesses, it really works for them, and they know it's predictable and they understand it.
Just for Mike jumps in, we're going to come back to this volume piece, we're going to come back to new kids on the block with VRPs, and we're going to come back to vision and strategy. So those elements you've picked up, we're going to talk about. You've mentioned Bax to IP, and I can't think about Bax to IP without the ostrich with his or her head in the sand saying you can't ignore it, it's coming. So that's probably a nice segue for Mike, who probably was the driving idea behind the ostrich with his head in the sand.
I can remember sitting around the table with the agency coming up with that idea. That's one of the best ones I think we've ever come up with. My story with direct debit, crikey. I joined Bax in 1989. Can't quite believe I'm saying that. And I looked it up the other day. The volumes of direct debits when I joined were 850 million. a year, so less than 1 billion. And this, you've both said so far, we'll talk about volumes later because we're close to hitting 5 billion as an industry. So yeah, joined way back in the late 80s. Direct debit had been around since 1970, so it wasn't new, but it was just about the time that the industry was putting some effort behind direct debit. The TV advertising had just started. I think that we were on the second TV campaign for direct debit, raising awareness, and we were just embarking on a program of engaging with billers, getting billers to actually pick it up, run with it, helping them run with it in the best possible way. And it was the start of the growth of direct debit, and I've been involved in it ever since. Ended up running the marketing team at Bax. Now, as you said a minute ago, Mike, still involved, but from a fractional marketing point of view, helping all sorts of organisations navigate direct debit. And absolutely agree with Richard, direct debit's still around. It's, it could do with some changes, which again I think we'll talk about. But having gone through Baxter IP, and I think from a marketing perspective, which is my take on all of this, the most important thing in hindsight that happened was definitely Audis, and from then paperless direct debit. Because if direct debit hadn't gone paperless back in 1998, it would have missed the internet. And to be able to sign up to direct debit online and over the phone was just a step change in terms of its longevity. And imagine if you weren't able to do that now, if you still had to sign all direct debits on paper, it would just have died.
Fantastic. Well, the role of the internet, you pulled up some direct debit advertising on the television. My time at Bax, I missed the direct debit advertising on television.
Yeah.
But I was there, you were there, Mike, at the time where current account switching, we did adverts on the television. What a buzz to see your product at the cinema screen on the television being advertised. Was it Coronation Street was the first one, wasn't it? Halfway through Coronation Street for the first.
Oh yeah, we used to get all the billers together in TV studios back in the day. So because ITV was very regional in those days, I don't know if it still is, we would invite all the regional billers into, let's say, Granada studios. So you'd have Northwest Water, Norweb, all these old sort of organisations, to make them feel like part of the campaign, make them feel like, direct debit belonged to them. You'd take them into the TV studios and you'd watch the advert go out live in the middle of Coronation Street. And it was a real event. I mean, the world's changed, obviously. But there's one quote that I remember from you, Mike, that just puts it all in perspective for me. When we were in Livingston House and sitting in your office, and you said, if you look out the window, how many people can say that 95% of the people walking past the street, my products touched them? And it's true. It's a ubiquitous product.
I think I don't go on a train very often these days, but that's exactly what I think on a train. On this train, everybody is using the product I was once responsible for. We have all played a significant part in. So it does give you a buzz. You sort of think if you had, I don't know, Coke, Microsoft, Apple, that sort of stuff. Let's talk about. I tell you what, I my background. We ran Bax together. It was fine. A great time, but. I'm hugely pleased of what we achieved within Bax, particularly within direct debit. Direct credit sort of was there and we did some stuff, but it was particularly about, I suppose we did some stuff actually. We transferred 1 billion transactions from the post office to Bax Direct Credit for pensions and benefits, didn't we? I forgot about that. That was quite significant. Great memory, fond memories of running this stuff. I'm so impressed, Mike. I've kept the lanyard you made for me ages ago. I'm so impressed with what we've done at Bax. I'm going to wear the Bax lanyard today. I hate lanyards, but
I don't have anything to hand, but there's plenty of stuff around the house.
So I've got a BackSafe device in my laptop bag, which I carry around with me always, and I always take it out. This is when I start telling new employees of the business when I'm going through the whole story of Bax and payments in the UK. It's that this thing is highly secure. It was never broken. It's amazing.
Never go anywhere without your BackSafe device. Well, clearly there's no tag on here because I'm no longer there, but happy memories. Let's talk about volume. If we talk about volume, payments in the UK are massive. I think it's something like 48 billion transactions a year if you include cash transactions and right the way down, debit cards and everything else. The value, £102 trillion per annum, is processed through the UK clearing systems and with payments. If you're a central banker, you're always going to argue it's all about value, the value of the transactions. And there's only one reason for that. CHAPS RTGS processes 88% of the value of the transactions processed in the United Kingdom, but it only represents 0.1% of the volume. Now, none of us are central bankers. I'm always going to think about volume over value. When I took over Bax in 2003, roughly 2.5 billion transactions a year. I talked about 1989 with 850 million. By the time I left the Bax world, Mike was still there, Richard, you were still in that world, we were processing 4.4 billion transactions. And then 6 years later, that's gone up to 4.9 billion. That's based on the November figure from pay.uk. We think when we see the December figure, ironically, it could be today they publish it, so it'll be just after we recorded this, but we're going to see a 5 billion transactions year on year.
Yeah.
An amazing total. It puts direct debit third in the top 10 payments processed in the UK, according to UK Finance. And even on their prediction for 10 years' time, so by 2034, they think it will only have dropped to fourth. Annoyingly, it'll be faster payments that's overtaken the third spot. But direct debit, absolutely at the top there. So half a century going strong for direct debit. Mike, Richard, what do we think? Have the volumes hit a plateau? Or is there still life in the old dog yet?
No, I don't think they've hit a plateau. As I said, given the activity we get and the customers we speak to, organisations are always diverting to that. I predict that some of the big non-direct debit billers that we have, some of the digital services today you can only get via credit card, and debit card, continuous card authority will actually move across to direct debit in the near future.
Okay.
I think there's an understanding that if you want to offer choice to customers, and direct debit is one of those things. And if you are a biller and you can predict the flows coming through and delinquency and when people have often things fail, it's a really solid way to bring in revenue and low cost compared to other methods. So I'm not surprised it's grown to 5 million, and I think there's a lot of talking down of direct debit, and often that's only within the world we live in on LinkedIn, but I think it's obvious that people still want to use it. Because we've seen, as Bottomline, an increase in DDIs, a quite significant increase in direct debit instructions going through our system in the last year. Year-on-year growth is particularly high. So that's just telling us that people are still using it and adopting it. I think you can't be a utility without it. You can't offer services without direct debit.
Richard, they're using it and they're adopting it. Is it because there's no alternative, or is it because it's a good product? Is it just awful? It's a horrible experience, but there's just no alternative. Or genuinely, is there something very clever about direct debit that actually people say, well, I don't particularly want to pay this bill, but if I've got to pay it, I'm happy to do it by direct debit?
I think direct debit is very, very simple. There's very little friction in the process of signing up for a direct debit. And you offer direct debit because you know that people understand it and know it well. So if you're talking to an adult, they will have a direct debit of some description. So you're not bringing anything new to them. And it's not a difficult process. There's some validation and there's some stuff to read in the script, but it's not hugely complicated and there's not lots of button presses. So if you're going to think about your user experience and you've got someone to commit to pay for something on subscription, which is good, so you want that because you want continuous, predictable revenue, then you're going to offer them the methods that they understand and want to use. Now, you may have alternatives because continuous card authority is there and it's used by lots of organisations today as a primary way of collecting. But just as a biller, why wouldn't you? And it's relatively low cost to set up and manage as well, given the strength of the product in terms of the A reports and the amendments and cancellations. It pretty much runs itself if you do it properly.
I think just to add to that, completely agree with what you're saying, Richard, about from a biller perspective. But if you look at it from a consumer perspective, I think it's the exact opposite of what you said, Mike, in when you raised the question. I don't think it's just because it's there and it's the least worst option. Everything that we see in research and when you talk to consumers, it's the actual opposite. So you've got 85% of consumers choosing direct debit or even actively championing it. They go looking for it. It's just got such a positive attitude as a product. And why, if you have a regular bill to pay, whether it's a subscription or your energy bill or your council tax or whatever it is, I personally don't want to have to actively manage that bill every month. I want some parameters around it. I want to understand that, there's an amount agreed before the direct debit goes out, and I want to understand when it's going out. But I don't want to sit there like I did when I was 20 years old with a whole pile of bills every month, the day I got paid, and be, in those days, writing checks out to people. I don't want to be doing that anymore.
And then going to the bank and queuing up with the bank gyro credit to pay them in. Absolutely.
And I just think it's unreasonable to think that direct debit, because it's got some faults and because it's 55 years old and because it's not the most sexy product out there at the moment and getting all the headlines, it just works. And it works for the vast majority of people that use it. You guys will be the same. I've probably got 10, 15 direct debits on my bank account every month.
Mike.
52.
22.
Richard,
Wow.
well, either
Okay.
you pay too much or you're really efficient in the way that you...
Well, I have teenage children with clubs. That's all I can say.
Yeah, okay. I've got 10, 15, I don't know, maybe 20. I'll go and count them after this call. I absolutely do not want to be in a situation where I'm actively managing all of those. Now, not everybody's like me. And again, I guess we'll talk about this during the hour. Not everybody has in a position where their income is regular, their income is fixed. They might be getting income from different sources. So maybe it doesn't work for everybody. And I know we'll talk about that when we talk about the new kids on the block. For me, direct debit will grow. I don't see that. UK Finance reckon it's going to grow, I think it's 2% by 2034. It'll grow for a number of reasons. It'll grow not only because it's an established product and most of us are well used to using it and look for it when we get a new bill. It'll grow because the population of the country is growing, the number of households is growing. We're now in a subscription culture, which we weren't 10 or 15 years ago. We're getting multiple new subscriptions. And yes, they're not all offered by direct debit. A lot of them are offered by card. But I'm pleased what you said, Richard, that when you're talking to these people, they're looking at the benefits of direct debit over the benefits of regular card payments. It's got some drawbacks, direct debit, which I think hold it back. I think we all know about the first collection, the time it takes to make the first collection. It's UK only, and I know I've spoke to some very large organisations who operate in lots of different territories. And one of the reasons they didn't use direct debit was they couldn't use it outside the UK. They didn't want a payment method for one particular territory. So it's got some problems, but I think it's there to grow. There's just huge opportunities still for direct debit.
I think you brought up some things about factors in the UK, the way that we're growing, population, number of households that will drive. I think at the heart, though, it is its simplicity. You talked about, maybe it'd be nice to do a direct debit outside the United Kingdom, outside of sterling. A long time ago, I mean, this is like the 1990s, I built products at Barclays, and I built an international direct credit and an international direct debit proposition. So a magazine subscriber could take collections, take debits from people right across Europe in the local currency from a local bank account. And it sort of was okay, but its biggest problem was it was too complex and too difficult and too hard to make it work. And then direct debit is that just the complete opposite. It's that absolute simplicity. Then
and I think
it's almost boring, because it works so well. Sorry, Richard, go for it.
Yeah, just to add on to Mike's, some things that aren't quite right. Business to business direct debit, I think, would grow if some attention was made at the scheme level on things like indemnity, and we can talk about this for hours. The unlimited indemnity that's in there at the moment, it doesn't suit business to business, especially when you don't know your customers very well. So for fixed supply chains and for utilities, business
or as a new business without much track record, and your bank don't know you very well in terms of you being prepared to offer you direct debit. So
I think looking at how a separate direct debit has a business to business scheme, I don't know how well that is used, but that's it's an idea, and often businesses would like to look at direct debit as a way to collect bills because it's highly efficient and all those things, but that unlimited indemnity kind of puts them off. It's like I'm giving someone an opportunity to take my profit and earnings away for X number of years. So I think that's it. First payment to account, as you said, Mike. It's painful. It takes a long time. And I think we could get to when something has failed, why it's failed a lot quicker than today. But these things can be fixed, and a lot of them without having to uproot technology and completely change infrastructure. It's tweaks to schemes on some occasion.
Right, so volume is a given. The growth has been amazing. We think there's still life in the old dog yet. We think that notwithstanding other alternatives, the volumes are still going to grow. That points to the importance of this thing working day in, day out, 24/7, processing payments in and out of our bank accounts. For me, that puts it in the same place as nuclear, as gas, as electric, as water. I'd almost argue that actually we should just nationalise the payments rails here in the UK and make sure the rails work on the same basis that, albeit some of the privatised firms that I talked about, but the way nuclear works and rail works. But in a previous Labour government, so back end of the 90s, Gordon Brown commissioned a report by Don Cruikshank in terms of the review of payments and the structure of the organisation. It came up with a number of things. One of it was to say that BACS Limited should be split into two. Should be an infrastructure company and should be a scheme company. And I was part of that process. I was on the board of BACS Limited at the time, but was part of the process of splitting the company. And we created a firm called BACS Payment Schemes Limited to run the schemes, and a confusing company called BACS Limited that ran the infrastructure that eventually became Vocalink, that eventually became MasterCard. And there's a relationship between the two. There's been a relationship since the 1st of December 2000. Pay.uk as the procurer of payment systems and what is now Vocalink MasterCard as the supplier of those payment systems. So it's driven by Cruikshank. I signed the separation documents 22 years ago, and now Pay.uk are processing 12 billion transactions a year. On the back of that, we know it's vital to the UK economy. We know that new payments architecture is dead. We know that a new retail payments infrastructure, or new RPI, a phrase I coined, Mike, remember new banks and new chaps, I've come up with new RPI, but we know that's rising from the ashes. But what it has driven is an absolute uncertainty of the way forward for rails, payment rails here in the UK. So, without probably a surprise, it was probably a given. In December, we saw an announcement that Vocalink and Pay.uk had signed agreements for infrastructure supply to be with the current rails to be continued to into the 2030s. We've probably all got views. Let me start with Mike and then Richard. Mike, why do you think it was important to extend those contracts so far out into the future?
Well, crikey, I just think it's certainty of supply. I think with all the uncertainty that you've talked about in the industry at the moment, the one thing that I've heard secondhand is putting people off thinking about direct debit and putting people off trying to grow direct debit is direct debit going to be around going forwards, from an infrastructure point of view? There's so many rumours, so many false stories being put out off the back of everything that you've just talked about. For me, it had to be done. Current contracts will run out, and you can't be in a situation where you don't have a supplier for this kind of what you termed critical national infrastructure. So it was a huge statement, but not a surprise in the slightest that the current contracts were extended with the current providers. And it obviously gives everybody a little bit more time to work out what the future is going to look like. But it's kind of like, not being able to turn your lights on at home. If the electricity goes, you can't afford for the electricity to go down in the country. You can't afford for the payment rails to go down. If direct debit didn't work and direct credit didn't work, it's just fundamental to the structure of society. People wouldn't get paid, benefits wouldn't get paid, mortgages wouldn't get paid. Would you therefore be in arrears with your mortgage? It doesn't bear thinking about.
So it's a supply and demand thing, isn't it? Actually, there's going to be a demand for direct debit so far into the future because we don't know when these new rails are going to arrive and when migration might have happened to those new rails. You need to make sure you've got supply. And I think for direct debit, I think for direct credit, I think faster payments absolutely works. I struggle with checks. I think that we've seen an announcement of an extension of supply to the mid-2030s for checks, and yet actually I think demand will cease far quicker than supply is around for. But checks is another story for another day. Richard, what's your take on these extended contracts that was announced in December 25?
Yeah, absolutely welcome. I think from our customers' point of view, we look back 3 years, I was doing 3 or 4 calls a week from people interested to know what was going to happen. So in our long-term planning, we know the NPA will happen. So their long-term planning said, let's bring someone in, let's talk to our current back supplier about what they're going to do with it. So I haven't had a meeting like that in the last 6 months where anyone's asked me to come and talk to them about what's happening because they don't believe anything is happening. So we've had... Since the Payment Strategy Forum, we were meant to have the new payments architecture in 2021, I think. And as those dates just whistled by, there's less and less trust that something was going to happen. I think even now, the extension of the BACS contract is welcome for our customers because it just removes a lot of uncertainty. It gives them some certainty that they can still use what they have, I think. For what we've seen, so if you read any of the documentation that's come out about National Payments Vision, BACS wasn't mentioned at all, direct debit was mentioned once. So the feeling is that it's going to be about faster payments replacement and account-to-account transfers and certainty of payment, so making faster payments work at a retail point of sale. I think if I can just simplify it to that level, that's way more important to the industry, to the regulators, to HMT than BACS is. I think it's always been kicked into long grass a little bit because I think it's really difficult, isn't it? There was one attempt to sort of change what direct debit could be and create a new type of direct debit as we were thinking about NPA, but that sort of went by the wayside. It's very difficult to replace something that works really well. I think it's not that broken. There's some repairs that need to be done to it. We have to replace soffits and fascias in our house every 10, 20 years, but that's kind of where we're looking at. You replace a bit of wood with plastic. But what I think it's going to do to extend this contract is going to just allow people to start making business decisions and start using direct debit, and they can look at the alternatives. I'm sure we'll talk about those as well, but with a bit more surety that what they have today isn't going to be ripped out. They don't have to think about getting rid of direct debit unless they want to.
I think your soffits and fascias thing is quite interesting, isn't it? You know, it's all very well getting certainty of supply for the next chunk of time. I think mid-2030s is talked about that, but it's what you do with it. Do you leave, let's just talk about direct debit, but it's the same argument for direct credit and faster payments. Do you leave direct debit stuck in aspic and wait for this new vision of some new retail payments infrastructure, or for variable recurring payments to dominate and take the traffic? Or do you do something with direct debit in the interim? And if you do something with direct debit in the interim, because the interim could be quite a chunk of time, is it just fascias and soffits, or is it windows and a conservatory? I've talked about it before, that we're talking about retail payment infrastructure. It's sort of beyond. There's a middle state here. The beyond state is, do we want to take direct debit and do something with it beyond, before the beyond arrives with a new retail payment infrastructure? And I'll tell you my fear. My fear is the same for faster payments as well as for BACS, direct credit and direct debit, is that we've signed some contract, the industry has signed some contracts for certainty of supply, and that we do absolutely nothing with the current infrastructure or current payment products until this thing arrives called retail payment infrastructure, that is so far in advance or so far in the future that we squander the years in between. I mean, after all, fast payments hasn't changed since 2007, direct debit since whenever, and are we really going to have the same products for another year? It's no wonder other countries leapfrog us, or other competitors bring stuff to market. But who knows? But I think we've got to do something with it. Are we going to change stuff, soffits and windows, or are we going to put a conservatory or an extension on the back? Let's think about some of the alternatives. I did a blog, I think it was just before Christmas, about the new kid on the block, variable recurring payments. It's funny, sort of continuous payment authority and the cards haven't really gone anywhere. Request to pay has been put in the dustbin with PayM and all the rest of the products that haven't flown, and now we're talking about variable recurring payments. We got an end of term report, I'm sure you read it, from the PSR and the FCA just before Christmas. Funny how everything finished just before Christmas. It talked about open banking payments growing by 53%. It talked about VRPs, so switching account to account VRPs being 16% of the open banking payments. VRPs has established itself with those sweeping payments. We've got on the horizon, perhaps, phase 1 use cases coming to market Q1 26. And phase 2, which is all bets off for VRPs, is still a chunk of time away. The regulator is saying, you know, I'm watching you, industry, and I'm expectant that things will happen. And yet we still don't know things about pricing. We still don't know things about propositions. Use cases are a little bit unknown. In effect, the regulators, as we went into Christmas, said, over to you guys, get on with it. As VRPs take centre stage in the regulator's mind and perhaps the industry's mind, what's your guess of what's going to happen with VRPs, its relation to direct debit? Will they coexist? Will they merge? Will they compete? What's going to happen? What, you know, if you had a crystal ball or a magic wand for VRPs, what would you say will happen?
I think if just to pick up on what you said right at the end there, my view is I think they'll coexist. I think they should merge. I think that's the smart money, but whether the industry will actually look at that, who knows. I think they can coexist. I don't think there's so much rubbish talked about VRPs, usually by people that have got a vested interest in VRPs, to be honest, how they're going to completely get rid of direct debits. I just don't see that happening, and I know we probably all feel pretty much the same on that. For me, the features of VRP is what direct debit should be looking at in terms of how it changes. It will coexist alongside direct debit, I think, quite nicely. I think there are some, again, I look at things from a customer point of view, and there are customers where direct debit just doesn't work for them. You know, billers will have people on direct debit who constantly, the direct debit is failing every month or every other month because it just doesn't fit their lifestyle. They've got multiple incomes. You know, we've all heard about the gig economy taking off in the last 10 years. Heard so many people have got side hustles to make up their monthly income that they're getting income in irregular patterns. Direct debit's not great for that. You know, you can't switch the payment date each month to suit when you've got the money. So for those kind of people, for people who genuinely struggle on a monthly basis to make sure they've got money in the account when the bills are due, I think VRP could be a really clever solution. But I go back to what I said. I think the flexibility of VRPs, the industry should be looking at that and looking to build it into direct debit, because direct debit's established. Awareness of direct debit, we stopped advertising direct debit because awareness was just ubiquitous. You didn't need to advertise it. People know it's there. Some people need a little bit more education as to how it works, particularly younger people. But to put all your eggs into the VRP basket, you're going back to where we were with direct debit in 1990. You're going to have to put an awful lot of effort behind raising awareness of it, raising understanding, getting billers to actually offer it. Is a whole different ballgame. For me, I think VRP is a really interesting conversation because it opens people's eyes to what direct debit could be. And we've got a huge opportunity as an industry to actually start having those conversations now.
Yeah, I think you said some really interesting things, Mike, about the people for whom direct debit isn't suitable. My view is that over time, organisations know the profile of those people and don't offer them direct debit. So it's not as if, because if you look at the failure rate of direct debit, it's like around about 2%, and it's growing as inflation grows and wage growth doesn't match that. But 2% is phenomenally low. It's incredible that a failure rate that low. And that shows, I think, that the billers know who they want to offer the product to. I think variable recurring payments fits really well at the low end, or where there's a bit of 50-50, or that risk is there.
Absolutely.
I feel like continuous card authority is more analogous to VRP than direct debit, and I think a lot of the thinking around VRP and the pricing and the consumer protection is coming from very much from a card world. It's coming from a card through a card lens. And I think this is one of those, we're all on this call, we're all fairly senior, we have to admit. We've been around a while. So, been
around a while. I'm not sure about the senior bit for me, but anyway, been around a while. I'll go for that.
We've been around a while, and it feels like sometimes, the view, a longer term view of people with experience isn't necessarily taken into account. So when you're thinking about how do we make VRP attractive, they're not necessarily looking at the right things. I think I heard one comment from a panelist at a conference that said, direct debit will be replaced by a QR code by 2030. It's nonsense. Because
just utter nonsense,
it's never going to happen. No matter how fast your rails are and how good they are at A2A. RP does a really good job, and that flexibility, that's a key one, but there has to be a balance as well. The bill still has to be paid. So the biller still needs to work out the risk of offering someone a subscription or a different payment.
I think that's absolutely key. If you're going to walk into an energy company today and encourage them or persuade them that VRPs are the way forward, it has no track record. Why would you remove something like direct debit, or why would you stop processing payments by direct debit and try and move people onto VRP? There's no track record, there's no record of reliability. No consumers know what it is at the moment. So if an energy company is going to say, please, sign a variable recurring payment, if I got one, I know what they are, but I'd still go, what? Why would I? It just makes sense to me that VRPs and direct debit not only coexist, but you start to look at them together. And then all the flexibility of VRP can benefit from all the awareness, the understanding, the trust that direct debit has.
And it's funny, Mike, you're almost playing back some of the findings, some research you and I did a couple of years back. Where direct debit works well, it works well, and the people who will not migrate, no need to migrate, and actually there are some cost benefits in migration. Where direct debit doesn't work well, there may be VRP or the attributes of VRP.
And I think it doesn't, and I think it will surprise the VRP advocates in how few cases it doesn't work well where people are using it today. So I think they're looking at a base that probably doesn't necessarily need to move. There is definitely a grey area. There's definitely room for both, and we've talked about the sign-up process. But also, if I look at my dad in his who does sign up for direct debits because he can happily fill in a form on his laptop to sign up for a direct debit when he's changed an energy company. He'll do that, but he doesn't have mobile banking or even e-banking because he doesn't want those things. He doesn't trust them. So I think the simplicity of the sign up works as long as you put something like pay name verification behind. It's a cop behind. There's no reason to abandon sign up methods and choice because now we're in VRP world and you have to authenticate through mobile banking. That doesn't work for everyone. But it works for a lot of people. I'm happy to do it. I've used open banking because I'm a bit of a payments nerd. When there's been an opportunity to make a purchase, like I bought a second-hand car using open banking. It was called Pay by Bank, and I've just sent, and the dealers just sent me a link. Said, "Oh, we're going to send you a link. Can you pay this?" And I clicked on the link, and it gave me my bank, a list of banks. Brilliant, loved it. That's only because I really know about it.
I'll save pay by link for my hobby horse for another day. But I'm glad your dad uses direct debit. When I was chief executive of Bax, my grandma would never use direct debit, and my parents said, "Well, he runs a scheme as the CEO of the scheme. I'm not trusting that; it doesn't work." So she didn't put much faith in her grandson, I don't think. So interesting. I mean, the thing we're not going to get into today, probably I'll avoid like the plague, is the fact that VRPs is likely to be more expensive than direct debit, but cheaper than cards. Yep. And we sort of think from the FCA PSR issued a note issued yesterday around pricing. So I'm not going to talk about that. If people want to see it, go to the psr.org.
.uk. Sorry, Mike. I think one thing I want to talk about as well. So you talked about the growth of open banking being at 53%. So if we look at November, it went down to about 48%. And we haven't seen December's figures yet. But we're talking about 30 or so million, which in comparison to other payment types is minuscule. It's less than 0.1% of all the payments that get made. So open banking is exciting and it should work. But the take-up isn't spectacular. The growth is, as you would expect, it's not exponential growth. I think you can't really compare it to contactless because people didn't have contact. They didn't have an alternative to a contactless card before. It was a new thing and exciting. Open banking is just another way of doing something you can already do. It's an alternative to a card payment. So there is a little bit of hype, and I wonder how many organisations will offer VRP and how the economics work out and how long we've got until the organisations who've invested heavily in VRP, how much runway they've got before they run out of money, if the take-up isn't spectacular from day one.
And that's the point, isn't it? It's about taking sort of the hype and the warm words around open banking and VRPs and translating that into a reality of things that change the experience for end users. And you're right, growing contactless, growing direct debits by 1 or 2% per annum sounds small, doesn't it? But when you actually do the math, it's a big number. Yeah, you're right. For my part, my fear is that we will stumble along the path of coexistence of direct debit and VRPs, and we will ignore continuous payment authorities in that mix. And rather than stumble on a coexistence path, I would much rather we merge the two and we take the essence of what we do with direct debit and the attributes of VRPs and create a very clever scheme for corporates, FIs, for fintechs, for banks to take and offer to their customers that give the cleanliness and simplicity of a vanilla direct debit, but with some options for the gig person, the options for those who find difficulty in managing their money, for the discretionary purchases and that sort of stuff. I'd much rather we went to direct debit 3.0.
Yeah, and Mike, you talked about current account switch service. I know you're very proud of it and what came out of it. And that's one of the things about direct debit, isn't it? Today, I move banks, don't have to worry about it. Direct debit moves. Don't even have to think about that, those mechanics, and nor does the biller. And that's the important thing. I think we're at very early stages with VRP in terms of functionality and deciding what is in or out and how account switching will work and amendments and cancellations and all these brilliant things that are in, and the grandeur of the detail.
So let's get a bit optimistic and a bit future thinking. Let's think about vision and strategy. We had the national payments vision. That's translated it into the new retail payment infrastructure, and from that, in Q4 last year, we saw a strategy issued by the PVDC. Thinking about that wider strategy for payments, the wider strategy for payment rails, and think about in the context of direct debit. If I was to give you both a magic wand, what would you do with direct debit? Where would you anoint particular activity for direct debit?
I think, I'll start. I think although I love the direct debit instruction process and Aldis has been very good to us, I don't think it's necessary to have an extra step. So I would make the first payment to the account the mandate like they do for a separate direct debit. So improve the sign-on process to allow banks to accept the risk of a direct debit, and people, when I sign up for a credit card, continuous authority, I don't have to wait 11 days before the first collection happens. It just happens. And I think people will accept that. So I think you can potentially make the first payment to account the direct debit instruction as well with the right sign-up process. I would also like to see direct debit running on a real-time rail, only from a point of view of the amount of time it takes to find out if something's failed in direct debit today. So I'd like to see direct debit failures reported back immediately with a reason and a real-time rail. think everything else about the scheme is so solid we should keep it.
Okay, well, throw your magic wand over to Mike, and Mike, what would you do with that magic wand?
I think if I was the people deciding what happens to direct debit in the future, the one plea I'd have for them is look at things from a user point of view. Don't look at it from an industry point of view. You know, we've all been around a long time and seen developments that have been done because they can be done. Don't do that. Look at it from a consumer point of view. Look at it from a user point of view. Look at it from a biller point of view. And if you look at the potential uses for direct debit where it isn't at the moment, and the potential for VRPs, put the two together. Why make sort of unnecessary competition when you've got all the benefits and features of direct debit that work? You've got the potential for things like VRPs that fit some gaps, as Richard's outlined with direct debit, some issues with direct debit if you want to take it forward. But where you've got one product that's got almost ubiquitous awareness, clear understanding and trust, build on it. Don't just leave it there. Don't put all your focus on the new shiny thing. Go back to common sense and build something. Take direct debit, move it forwards, build it. Take the bits of VRP that work where the bits of direct debit don't work. Put a product together that actually works not just for the people that use direct debit at the moment, but for potential use cases and consumers that it doesn't work for at the moment.
Yeah, I think you raised a good point, Mike. Sorry, other Mike.
No, go for it.
Around the billers. Now, we're not seeing, I speak to a lot of billers, that's part of my job, and they're not involved in this process today. So the understanding of how they want this to work is missing, which is where I think the take-up of VRP is going to suffer. There's not a lot of conversation there. So it's got to work for the biller, because otherwise they're not going to want to do it. It's really important that their voice is there beyond a token large scale direct debit user on a committee. This isn't.
We're very good at having sort of user committees and customer committees. It's the perfect example of where we should bring billers into the conversation. Completely agree.
Perfect. If I was to take the magic wand, I think I would think about infrastructure and proposition. I think the first thing I would do is tap my magic wand on Bax Direct Credit, rip it out of the Bax engine and put it into faster payments, and have a very, very smart push faster payment. Hopefully not stuck in Aspic since 2007, and hopefully not waiting another decade for a new retail payment infrastructure, but rip out direct credits and have a single push. I would then think about how we harmonise single access and settlement layers. So we've got the simplicity of dropping files in and dropping files out, thinking, Richard, about your timeliness of unpaid and all the rest of it. That would leave us with a pure direct debit engine, the thing processing direct debits or pool payments. And then I think I would think about the proposition, the direct debit guarantee, unlimited in time and amount for over 50 years worth of your transactions. That seems bonkers. The Europeans will have it, 13 months or whatever it is. I think much more sense to time limit in amount and time the guarantee. Mike, you remember me, and I remember lots of conversations with you about simultaneous debit and credit on a direct debit and direct credit, but actually how we deal with that cycle, the processing cycle of putting payments in and getting them through the process quicker. And then the final thing I would do, and I'm making it sound really easy because in my mind it is easy, I know it's not, is to merge direct debit, variable recurring payments, have a request to pay functionality in there, have a very vanilla pool payment, the simple paying my electric bill, my gas bill, and then have a richer VRP type attribute where there's some variability in the amount, the timing and the attributes of a flavour of a payment. Richard, you mentioned B2P direct debit as well. Do you have a B2P direct debit to try and encourage businesses to work on direct debits and have the trust for the business payments that the CFOs individually will have for their own individual payments and that they make. So I think that's how I'd use my magic wand. But who knows? We're going to follow this story for the next few years.
Yes.
I certainly won't be following it for the next decade, but I'll be following it for the next little while. And we'll see what happens. We've probably burnt our time today. I don't know, we've had a conversation, the clock says 50 minutes. This is, I think that's been really thought-provoking. We mustn't keep it to ourselves. Let's publish it. I'll put it out on Payments Unpacked TV on Monday, and then we do some clips and stuff. But let's share what we've talked about with other folk. And if other folk got some comments, I'm sure Richard and Mike, they'll reach out to you on LinkedIn. And, they may even subscribe to Payments Unpacked as well. So we'll see. But guys, thank you so much for your time today. It's been a real pleasure.
Yeah, good. It's been fun.
Thank you.
Looking backwards and looking forwards. Thanks very much.
Good stuff. See you both soon.
Thank you.